Okay, finally this morning to introduce Graham Sloan, Managing Director of Karora Resources. Graham is a mining engineer with extensive operational and corporate experience, including MD and CEO roles at a number of ASX and AIM listed companies. Strong track record of success in building and operating integrated mining operations. So please welcome Graham Sloan.
Thank you, ladies and gentlemen. It's an absolute pleasure to be here today. There's been lots of good events and lots of great presentations to date, and we started off with the Premier's sort of opening address. We had the merger of the Super Pit partners, and then last night we had the Peter Cook and the Smoking Guns AC/DC that rang out, and I've got to say, after a lot of consideration, Raleigh and Bill, wherever you are, Peter Cook took the gong as the best event so far at this time, so it was a great night, and you can probably hear from my throat, it's still a bit there. Look, Karora Resources is really it's a simple story. It's a great story. It's a story about transformation, and it's a story about delivery. Just before we go, the obligatory disclaimer, I'm sure you've all read. In just over 18 months, we've taken this company from what it was, a single asset, cash-strapped company that was toll treating its ore through a third-party facility, into a multi-mine, gold-focused, low-cost, cash generation, and a tremendous amount of upside. We've changed the name to Karora Resources just to reflect the more gold focus we had. We took what was a nickel mine that was for 40 years a nickel mine, and transformed it into a long-life gold mine. In June of 2019, we acquired the Higginsville operation from Westgold for $50 million on a walk-in, walk-out basis. So day one, we were generating cash flow. With that acquisition came a 1.4 million tonne per annum plant, just under 2 million ounces of resource, and a very, very large tenement package that, for the large part over the last decade or so, has had little to no exploration on it. We sold our 28% interest in the world's second largest undeveloped nickel operation, or nickel deposit, I should say. Sold that for Canadian up to $48 million. Again, just to focus on gold. We completed a 4.5-to-1 consolidation, and we added 15 plus new institutional investors onto the register. We've acquired what is a Spargos gold mine, Reward Gold Mine, that we picked up for around $4 million an issue, with a couple of back-end payments to come. We importantly renegotiated 2 sets of royalties, one over the Higginsville tenements and one at Beta Hunt. The Higginsville tenement one was really quite an onerous royalty, and it basically stifled exploration for the last decade or so. That's now gone, and we're into exploration in a big way. And hopefully you'll see those results start to flow through. We've increased our exploration budget by 50% to $15 million. So for a company our size, that's a considerable spend. And we're looking forward, as I said, to the results starting to flow through very shortly. We've delivered 4 straight quarters of either meeting or exceeding budget guidance, production guidance. But importantly, in every one of those quarters, we've seen our all-in sustaining costs getting closer and closer to that $1,000 an ounce, which we expect to get to by the end of this year. Our guidance for 2020 is 90 to 95,000 ounces at an all-in sustaining cost of $1,050 to $1,200. And as I said, fully expect both of those to be exceeded or bettered. We will, in fact, have a very strong, well, we do, in fact, have a very strong resource and reserve position. We have just over 3 million ounces of resource, of which about 2/3 of that is measured and indicated. Our resource reserve position is around just under 700,000 ounces, and we're currently working through both of those, and we hope to deliver to the market a brand new resource and reserve by the end of this year. At Beta Hunt, we're producing from two main areas, what is called the Western Flanks and A Zone. And both of these areas are what we call north of the Alpha Island Fault. Now, those two areas have been producing somewhere around 60,000 tonnes a month, so somewhere up to 700,000, 750,000 tonnes a year at typical Beta Hunt grades, which is around 2.8 to 3 grams. We have been carrying out some exploration, both along strike, but also some grade control in amongst those Western Flanks and A Zone. Now, and I'm pleased to say that both of those up in Western Flanks we've been able to extend, but in particular at Western Flanks we've discovered two brand new footwall zones. Now, these are typical Beta Hunt grades of say 2.8 to 3 grams, but they're at width up to 20 metres wide, so a low cost and working towards that low all-in sustaining cost for us. We have south of the Alpha Island Fault, we've been carrying out most of the exploration for both nickel and for gold. We originally started off taking nickel exploration and with some very good geology from our exploration geologist team and led by Steve Devlin, we're able to find a bit of gold along the way as well. So we were drilling nickel, and we drilled the first nickel discovery at Beta Hunt for over 13 years. Now, those nickel grades you see up there are real, they're 5 to 7%, and they extend for some 400 metres. Lightly drilled, still to be further drilling in there, and potentially to extend another 200 or 300 metres. So this is a brand new zone. It will be a long life zone. It will produce a lot of nickel for us. Even though we are a gold mine, it's a great credit to have in amongst that. And importantly, we're starting to see with that nickel, right adjacent to it, some very high grade gold. Some of those numbers you see up there, you know, plus 10 grams. So again, just gold and nickel together, or nickel. And then immediately below that, we have a brand new gold zone called Larkin. Now again, this is called sort of, it's again extends somewhere over the 400 metres, and who knows, we haven't drilled. It's still open to the north, to the south, and down dip. But importantly, why we were sort of looking to drill and find the right drill position to put some holes into Larkin and the 30C nickel, we went back to some of the old development, which was over 30 years old. And we've noticed that the Larkin lode actually came back and intersected that lode. We sampled that area, and it delivered to us sort of 14 metres at over 5 grams. That's from the old levels, the original mining went through chasing nickel, and lo and behold, left the gold behind, which we will take on. So a great lot of exploration, both in north of the nickel and south of the Alpha Island faults. So and I think you put all that together and you can start to see Beta Hunt look for a mine life of, well, who knows. At the moment, we're talking 10 years, but from what we're seeing, it could be many more years after that. So that little old nickel mine that's been there for 40 years may well have another 40 in front of it. Higginsville, we're producing from two open pits at the moment, Baloo and Fairplay North. These are typically 2 gram pits. They feed into the 1.4 million tonne Higginsville plant, and the rest of that material, about 60% of it, is fed by Beta Hunt. We have a third pit coming on stream. The current work now is being a pre-strip's underway as we speak, and we're targeting to have 2 to 3 open pits plus an underground. We haven't got to the underground yet, we're just starting to work at it, and we have a number of targets that we can look at in the underground. We have what we call Aquarius, we have the Two Boys, we have the Trident, and the list goes on. But one of the first ones cabs off the rank will be, in fact, Aquarius. Now, some of the historical data we've picked up there, this is a virgin ore body, never been mined, not that deep, and still open along strike and down depth. And you can see from some of those grades there, they're just fantastic. They're 500 grams at plus 2 metres, and 200 grams at plus a decent width. So these things They will deliver a lot of ounces. They will deliver a lot of high-grade ounces, and I'm sure that that this will add to that. Already we are 90 to 95,000 ounces. Exploration we're targeting somewhere in 100,000 metres of drilling this year. We have, as I said, budget increased by 50%. We have 40 plus brownfield targets ready to drill on exploration just at Higginsville alone. And part of that is because we've renegotiated that royalty that opened up to every one of those tenements. So whilst we have just recently completed a high-grade gravity survey out on the Lake Cowan, and again that's thrown up another umpteen targets that Steve and the team will obviously follow up. So capital structure, fully diluted basis, 158 million shares, good amount of cash in the bank, 50 million thereabouts, 53 Australian at the end of quarter 2. We'll expect to see that increase significantly in quarter 3, and we'll continue on adding cash to that as we go forward. Good coverage, a good set of major shareholders led by Eric Sprott. And if you look at our share price performance in the last, since March of this year, we've gone from around 80 cents a share to around $3.70. So plenty of upside then and still plenty to go. So I will leave you. I'm getting the light, so it's the warning light, so I need to get going. So Digby, I will leave you this. We have a great team. We have a really tremendous executive team. It's led by an executive chairman in Paul Hewitt. Paul has done a tremendous job in putting this team together and these projects together. He's delivered it. There's a lot of vision in it. We've had some great work from our operational people. I'm really proud of the performance that they've put forward, and our people across both sites, and in fact the executive both in North America and here in Perth. So a lot's been done in the last 12 months. We've got a lot to go. This is a great project, and I'm really pleased to be able to stand up here and present it to you. Thank you very much.
Thanks very much, Graham. I'll just ask one quick question, Graham. You got time? So you listed on the TSX. Any plans to list on the ASX?
Yes, it is. I mean, earlier on in the piece we were looking to list this year. Obviously, with the COVID come through, it made it more and more difficult. But at the same time as that, we had the TSX, we were listed on, started to get heat up, and the ability to raise cash over there if we needed it and to add institutional investors was there. So it's been pushed to one side, but certainly we'll look at it again in the new year. And I'd love to be able to list here on the ASX because we're an Australian asset, and I think we should be on the ASX. Thanks, Digby.
Well, well done, Graham. Please thank Graham Sloan from Karora.
Well done, mate.
That's it. We're breaking for lunch. Thanks very much for joining us this morning.